Summary and Review of In Fed We Trust, Ben Bernanke's War on the Great Panic by David Wessel. Introduction. David Wessel's In Fed We Trust provides an insider's view of how the Federal Reserve, under the leadership of Chairman Ben Bernanke, responded to the 2008 financial crisis, often referred to as the Great Panic. Wessel, a seasoned journalist and economics editor at the Wall Street Journal, draws on extensive interviews, deep research, and first-hand accounts to chronicle the dramatic and unprecedented actions taken by the Fed to stabilize the global economy. The prelude to the crisis. The book begins by examining the economic conditions leading up to the 2008 financial crisis. Wessel outlines how a combination of factors, overconfidence in the housing market, risky lending practices, and the proliferation of complex financial instruments like mortgage-backed securities, created a ticking time bomb. The global financial system, Wessel argues, was ill-prepared for the scale of the collapse that followed. Central to this narrative is the Federal Reserve's role in overseeing the financial system. Wessel critically assesses the Fed's actions before the crisis, highlighting its failure to recognize the risks posed by the housing bubble. He also delves into the personalities of key players, including Ben Bernanke, who took over as Fed chairman in 2006. Bernanke's background as a scholar of the Great Depression positioned him as someone acutely aware of the dangers of a financial collapse, but even he, Wessel argues, underestimated the looming catastrophe. The Great Panic unfolds. Wessel vividly describes the unraveling of the financial system in 2008, starting with the collapse of Bear Stearns, a major investment bank. The Fed's intervention to prevent Bear Stearns from failing outright marked the beginning of a series of unprecedented actions. The crisis soon spread to other financial institutions, culminating in the bankruptcy of Lehman Brothers, a pivotal moment that Wessel portrays as a turning point in the crisis. The failure of Lehman Brothers sent shockwaves through the global financial system, leading to a complete freeze in credit markets. Wessel's narrative skillfully captures the atmosphere of panic that pervaded Wall Street and Washington during this period. He provides detailed accounts of the frantic meetings between government officials, bankers, and policymakers as they struggled to contain the crisis. The book portrays the Fed as the last line of defense against economic collapse, with Bernanke and his team taking extraordinary measures to stabilize the system. The Fed's response. A significant portion of In Fed We Trust is dedicated to examining the Fed's response to the crisis. Wessel breaks down the Fed's various strategies, from cutting interest rates to near zero, to implementing unconventional policies like quantitative easing, QE. He explains how the Fed injected trillions of dollars into the financial system, effectively becoming the lender of last resort for the entire global economy. Wessel also delves into the controversial decision to bail out AIG, the insurance giant whose failure threatened to bring down the entire financial system. The Fed's intervention in AIG is portrayed as a necessary evil, with Wessel highlighting the moral and political dilemmas faced by Bernanke and his team. Throughout the book, Wessel emphasizes the unprecedented nature of the Fed's actions, likening them to a form of financial triage aimed at preventing total collapse. The role of the Treasury and political dynamics. While the book focuses primarily on the Fed, Wessel also examines the role of the U.S. Treasury in the crisis response. Then Treasury Secretary Hank Paulson, a former CEO of Goldman Sachs, emerges as a key figure in the narrative. Wessel portrays Paulson as a man caught between his loyalty to Wall Street and his duty to protect the broader economy. The relationship between Paulson and Bernanke is explored in depth, with Wessel showing how their partnership, despite occasional tensions, was crucial in crafting the government's response to the crisis. Wessel also sheds light on the political dynamics at play, particularly the tension between the Fed's technocratic approach and the populist anger that erupted as the crisis unfolded. The bailouts, particularly those of Wall Street firms, were deeply unpopular with the public, and Wessel explores how this backlash shaped the decisions made by policymakers. He also touches on the broader debate about the role of government in the economy, a theme that would resonate in the years following the crisis. Bernanke's philosophy and legacy. One of the central themes of In Fed We Trust is Ben Bernanke's economic philosophy and how it guided his actions during the crisis. Wessel paints a portrait of Bernanke as a man deeply influenced by his studies of the Great Depression. Bernanke believed that the mistakes made during the 1930s, such as allowing banks to fail and not providing enough liquidity to the financial system, should not be repeated. This belief, Wessel argues, was the driving force behind the Fed's aggressive interventions during the Great Panic. Wessel also explores the broader implications of Bernanke's actions, questioning whether the Fed's response set a dangerous precedent. The concept of too big to fail, which Wessel argues was solidified during the crisis, raises important questions about moral hazard and the long-term impact on the financial system. While Bernanke is credited with preventing a second Great Depression, Wessel also acknowledges the criticisms that the Fed's actions primarily benefited Wall Street at the expense of Main Street. Review, Strengths and Weaknesses. In Fed We Trust is a compelling and well-researched account of one of the most significant economic events of the 21st century. Wessel's journalistic background is evident in the book's accessible writing style and narrative structure. He succeeds in making complex financial concepts understandable to a general audience, without oversimplifying the issues at hand. One of the book's greatest strengths is its detailed portrayal of the key players in the crisis. Wessel provides readers with a behind-the-scenes look at the personalities and decision-making processes that shaped the Fed's response. Hank Paulson and other officials are portrayed as real people grappling with enormous challenges, rather than faceless bureaucrats. The book's pacing is another strong point. Wessel expertly balances the fast-moving events of the crisis with in-depth analysis, keeping readers engaged throughout. The use of direct quotes and anecdotes from those involved adds a sense of immediacy to the narrative. However, the book is not without its weaknesses. Some critics may argue that Wessel is too sympathetic to the Fed and its actions during the crisis. While he acknowledges the criticisms of the Fed's response, the book largely portrays Bernanke and his team as heroes who saved the global economy. Critics who believe the Fed should have taken a different approach or that its actions exacerbated income inequality may find the book lacking in critical analysis. Additionally, while Wessel provides a thorough account of the crisis from the perspective of policymakers, the book pays less attention to the broader societal impacts. The human cost of the crisis, job losses, foreclosures, and economic hardship for millions of Americans, is not explored in depth. This focus on the elite decision-makers may leave some readers wanting a more comprehensive view of the crisis's effects on ordinary people. Conclusion. David Wessel's In Fed We Trust offers a valuable and engaging account of the Federal Reserve's response to the 2008 financial crisis. Through meticulous research and vivid storytelling, Wessel provides readers with a behind-the-scenes look at the dramatic and unprecedented actions taken by the Fed to prevent economic collapse. While the book focuses primarily on the decision-makers at the top, it offers important insights into the challenges and dilemmas faced by policymakers during a time of extreme crisis. The book raises important questions about the role of the Federal Reserve in the economy and the long-term consequences of its actions. As the world continues to grapple with the fallout from the Great Panic, In Fed We Trust serves as a timely reminder of the power and limitations of central banking in an interconnected global economy. In conclusion, In Fed We Trust is a must-read for anyone interested in understanding the 2008 financial crisis and the pivotal role played by the Federal Reserve. While it may not provide all the answers, it offers a compelling and thought-provoking narrative that sheds light on one of the most critical periods in recent economic history.